Along with my day job running an investment business, I started Tinsley Park Talks, a global networking and leadership platform where I interview industry legends from finance to tech and great thinkers to notable celebrities. In these interviews, we discuss great ideas around investing, entrepreneurship, problem solving, and all other lessons of life. Welcome to another episode of Tinsley Park Talks.
Take a moment to please subscribe to the channel and like this video. We really appreciate your participation.
This program is in partnership with Nesh. For more information, please click on the link below.
Martin Taylor is the co-head of the Foundation Fund and member of the investment committee at Vista Equity Partners, one of the most successful investment firms in the world today. When it comes to software and technology investing, Vista has undoubtedly emerged as a preeminent player in value creation and operational distinction. Martin's been one of the key architects of Vista's operational playbook, which is regarded as one of the leading best practices in tech investing today, particularly in enterprise software. I had the rare opportunity to ask him about his journey from humble beginnings to his extraordinary rise to success, his perspectives on investing, and his unwavering commitment to philanthropy. Mr. Martin Taylor, welcome to the show.
Thanks, Najib. Excited to be with you today.
Yeah, it's been a while since I've been waiting because I know you're really busy, but it's a special day that you're finally able to join me today. So, I want to get right into your early childhood background before you even got into the professional world. So please take us back to pre-George Mason University days.
No, thanks for that. And again, thank you for giving me the opportunity to talk to you today. So I grew up in Virginia. I'm a Virginia boy. I moved around kind of every 2 years. My dad was a minister, a Baptist church minister, and kind of felt that his calling was to go to a church and kind of build it up and then go to another church and build it up. And so I don't think I lived in any one city more than 2 years. And we didn't grow up affluent by any means. And I didn't have any exposure to technology or finance. My horizon was kind of limited to ministers, teachers, lawyers, and doctors. I thought those are only careers that you could have to. So I just grew up all around Virginia. And ultimately went to George Mason, as you mentioned, to go to college.
Great. And so did you do your undergrad there? Is that where you went?
I did, yeah.
And I should probably know this, but what was your major?
So, I majored in econ. And so, again, not in technology. They happen to have a Nobel laureate at George Mason, which has attracted me to want to go to George Mason. I lived in Fairfax in Northern Virginia. So it also worked out, because, again, we didn't have a lot of money. They gave me a freshman scholarship, an academic scholarship. And so it was pretty much of a no-brainer. You're going to go there because you got an academic scholarship. You can live at home. And that's kind of how I started my college career. Throughout that, I did some internships, and the one that probably connected the most was one I did with, at the time, a company called 9X, which was a New York, New England phone company. And they had a series of product centers where they sold computers and technology. And so I got an internship there, and I began in the back room stocking shelves with computers. But then in my spare time, I taught myself to code and program and build databases, and ultimately got someone from Microsoft that was working with the organization said, "Hey, would you ever want to work at Microsoft when you finish school?" And so that's kind of how I then ended up in technology. But it wasn't because I was studying technology by any means.
Got it. So quick facts. I have a really close friend that lives in Herndon, Virginia.
Oh, yeah.
That's where he's from. So I've visited him a few times, went to his wedding in that area. It's a really nice area. I like it. The nature is nice.
Northern Virginia was great because you were in Virginia, you had proximity to the DC metro area, and so that was great. But then you also could just kind of be in the rolling hills of Virginia.
Yeah, absolutely. Yeah, it's a beautiful place. I want to talk about your time at Microsoft. So you've described how you got into Microsoft. You've spent 15 years there, and you worked really closely with Steve Ballmer. And I want to ask you some of those moments of Steve Balmer that I think the general public know him from watching, his presentations, etc. But before we get there, I wanna just kind of would like you to please take us back those 15 years you spent in Microsoft. What did you learn in that company, and take us sort of through the journey of those 15 years, and what made you ultimately decide to leave?
Yeah, so it was almost 14, not quite 15. But
Okay.
I'd say it was such a transformative time. You think about it. I joined Microsoft in 1992, late 92, early 93. And I joke with some of my, younger friends that I traveled around Northern Virginia telling people what the internet was. And again, that's showing my age, obviously. But I was literally setting up a computer
You're
and
looking great for your age.
sleep in a freezer. That's how you do this. But yeah, I was setting up computers and in ballrooms in Northern Virginia at the Marriott in Tyson's Corner, demonstrating that you can buy a pizza online. Wow! I mean, and so just trying to get people excited about the internet. And so you go from that massive wave that really transformed, the world for sure, and being part of that, kind of on the ground level, was just very transformative in terms of my understanding and about the impact of technology on every single facet of life. It's interesting. When I joined Microsoft, I told my friends, "Oh, I joined this company called Microsoft. Oh, what is that? Oh, here's what they do, and here's this guy Bill Gates, and blah blah blah." And now, obviously, Microsoft is a household name, in any house in the world. And so one, joining Microsoft and being there from 92 to 2006 just gave, I was able to see the impact of software in our day-to-day life and everything that we do. So I think that was kind of one thing. Secondly, working at Microsoft and being there as our company scaled, I was able to watch and see how you scale and grow an enterprise, and consumer software platform and business. Many of those nuggets I brought over to Vista, when I came here, back in 2006. Then the third area I just would say is, having the opportunity, as you mentioned, to work for Steve Balmer when he was the CEO, as his chief of staff and head of strategy, aka chief of chores, is kind of what that job was. As I kind of ran around and did stuff that nobody else was assigned to do. Just really helped me understand, kind of how to run an organization, at a senior level as you're growing, and again, trying to apply those principles to what we do every day here at Vista.
Got it. Going back to Steve Ballmer, we all know him as a big personality. We remember his speech. I'll probably try to play a scene here shortly. But what was your experience working with him as a leader? Like, how was he, behind the doors, office doors?
Yeah, no, I mean, I had the benefit of meeting Steve very early in my career. We had an event that we were doing in Washington, D.C. I was a pretty junior sales rep or partner channel rep. And he and I were going to do a demonstration of one of our new products. And I had never met him before. As a matter of fact, the person that was supposed to do the demonstration was sick, and I was kind of young and naive and ambitious. I'll do it. And I spent the night studying on how to do the demonstration. Steve did his keynote and then turned to me to do the demonstration. And as I started, people started screaming from the audience, "We need to know about this, and what about this?" And you can imagine a early 20-year-old beside Steve Ballmer. I'm freaking out, and Steve, to his credit, just kind of said, "Hey, stop the demonstration. There's obviously some concerns from the audience. Let's do that." And so he gave me a legal pad, and for the next hour, I just sat there taking feedback that was being screamed at us, kind of in a gladiator type, arena environment. And then I wrote up all the stuff that came out of that. And because, again, I was young and naive and ambitious, I also thought it was my job to tell the company what they should be doing with all those things that came up. But that, I met him early on in my career. But that one little vignette on how it was more important to take the feedback from the audience than it was to deliver to them what we wanted to do was one of those nuggets where, I'd say my time working with Steve, very customer and partner focused, and very driven to make sure that we're satisfying the needs of the partners and customers that we serve and support. I'd say then going to work for him, was definitely an experience on understanding, as I talked about, organizational design, and how to think about making long-term bets. Microsoft had the ability to look at a space and didn't get them all right, but got more right than wrong, which is why it's the successful business that it is today. Probably the one thing that people probably don't fully know is that Steve is actually more of an introvert than an extrovert. You'll
Oh,
see him.
really?
You see him in the presentation you mentioned. You might see him at a Clippers game now, and he's kind of got a lot of excitement and exuberance, and that's for sure. But behind closed doors, he just wants to put his head down and go work on some problems and get some stuff solved. And so, he's one of the people that I rare people I've seen be able to turn it up at such a major scale, but then also be more comfortable just kind of being, working on some problems.
I want to ask you about the transition to Vista after Microsoft. Do you mind sharing whom you've met at Vista, or they reach out to you? Did you know Robert Smith personally, or we're just curious how you made that transition?
Yeah, so I met Robert. I can tell you exactly. The first time I met Robert was January of 2003. I was still at Microsoft. He was 3 years into, or 2 years into, really getting Vista up and running. A mutual friend of ours who was working at the time in the Valley said, "Hey, man, you got to meet this guy, Robert Smith. He's doing some amazing things. It has some ambitions as it relates to private equity and enterprise software. And you're, one of the most senior people I know in the world of software. You guys have to meet." And so we finally were able to meet. And over the next 2 or 3 years, just really spent a lot of time together, understanding Vista, what they're trying to do. And then ultimately, I joined Vista because I saw the opportunity to really take some things I learned over my almost 14 years at Microsoft, coupled with some things that Robert and at the time the people there had built, to say, how do we now create scale? One thing that I've always appreciated about Robert, both and as we think about Vista, but then also in his philanthropy and the personal work that he does, is how do we do things at scale? And so my job was to really come in and partner to go build out what we now call the value creation team, but this operating platform at scale. We always knew that was how we're going to differentiate, vis-a-vis anybody else. When I left Microsoft in the summer of 2006, I didn't know what I wanted to do. And so I spent about 6 months talking and meeting with everybody under the sun. And I realized that what I know how to do really well is to really help businesses and grow at scale. And so it just was a perfect match for Robert's vision for Vista.
Got it. And if I recall correctly, you were the first non-investment banker hire. Can you talk a little bit about that?
Yeah, when Robert and I were talking, and again, my vision and my understanding at the time back in 2003 and four, were private equity, and they were just a lot of Excel quant oriented investors who didn't really understand the operational aspect of a software company, but they understood on a spreadsheet, what could happen if you got a few things right. you know, to my pleasant surprise, as I got to know the Vista team over those 2 years of getting to know Robert, I realized that they looked a lot more like, I'd say, operators than investors, because they really understood software companies. And so to that end, it made a lot of sense, for me to join and partner. And I was the first non-investment banker that we hired, because again, at the time, I wasn't coming to go do deals. I was coming to build this operational platform that all of our deal teams could eventually work with and build upon, and we could then make that part of our value creation.
Yeah, and we're going to talk about the value creation process and that operational playbook. But it's a great segue to talk about Vista Equity in general and the different funds. There's, as I understand it, there's a large cap, a mid cap, and a small cap fund. You're leading the mid cap fund called Foundation Fund. But would be great to kind of hear the evolution of Vista Equity into these three different funds and what role you're playing in the Foundation Fund today.
No, thanks for that. And you're right. We started with one fund and one platform. As that fund began to scale, because we just saw bigger and bigger opportunity, one, we did not want to concede that mid-market space. That's really was the origin of Vista. It's where we began Vista. It's where we thought and saw that our value creation could really have, great exponential return if we got a few things right. And so we didn't want to concede that space. And so as we grew our what's now our flagship product, we then brought online our foundation product. In a similar fashion as that grew, we then brought on our Endeavor product. And so that's kind of our small, mid cap, and large cap strategies, flagship, foundation, and down to Endeavor. Now, one thing I should say is, it's easy to say, well, you've got three strategies differentiated only by check size, but that's not quite true. We do look for the same profile of enterprise software, mission critical, high recurring revenue, a platform that has what we call demonstrable, quantifiable ROI to their end customers. And so that's kind of a bit of a lens we look through, and that happens across all of our fund strategies. But what you need to do with a company that's kind of in that emerging growth stage versus growth scaling stage versus scaling mature phase, you have to do different things when you own those businesses. And so we differentiate not only by the size of the equity that we'll put into a deal, but we also differentiate about what we do with that company, when it's in our hold period.
Makes sense. Makes sense. And I just want to quickly zoom out a little bit on the macro side of things. If you could describe what Vista is doing in enterprise software investing today, how is it playing a key role in this modern economy?
Yeah, and so I should maybe just back up for a second and just explain that we were purposeful on how we designed this strategy, and so people sometimes think, you invest in software, that's B2B, B2C, embedded software, or biotech. Like the conversations go pretty broad, and we try to say first and foremost, we focus on enterprise software. We understand the transformative effect that software can have from a productivity perspective, in our economy. And so that's an area that we saw as both an existing back in 2020, back in 2000 when we started, and expanding and growing, as we go through. Secondly, we were very purposeful, in saying that we want to acquire these businesses where we can add value, where we can bring, and over the last 24 years, we've codified a set of best practices. We've built an internal value creation team, and we're able to then work with all of our companies and their founders and their managers and their executives to drive these operational transformations. And so the businesses that we exit just are much better businesses than the businesses that we acquire. And so that's kind of was our design point. And I was talking to a friend at dinner last week, and he heard me on the phone talking to somebody about Vista and what we do. And he goes, I've known you being at Vista for 17 years, and you said the exact same thing for 17 years. And I said, yes, we've done the exact same thing. We just continue to scale what we do, as the market opportunity continues to grow. Today, we have over 100 billion of assets that we manage, over 85 portfolio companies. We've done about 600 or so private equity transactions, in the life of Vista, representing more than 300 billion in transaction value. Some of that's platform deals and then add-on acquisitions to those platforms.
Yeah, you guys have an impressive track record. So I'm really excited to learn more about the foundation fund here in a second. So, if we wanted to share some of the things that you're looking for from the foundation fund in terms of investments in these software companies, and for owner operators or entrepreneurs that are watching today, what would you tell them that makes a really good investment criteria for you guys?
Well, Najib, I can't give you all the secrets because I know you want to be a software investor too, and I want to have to compete with you one day. So, in all seriousness, it's a few things, for us. I think first of all, I should talk about at least in the mid-market where I spend most of my time, and so I co-head the mid-market strategy with the partner. We've had our strategy in place for about 13 years, and I'd say that we're now operating at scale, and we look for three types of companies. We look for what I like to call vertical category leaders. And so within enterprise software, within any vertical, and you think about yourself, that participates and uses software, for vertical niches, there's 1, 2, 3, or 4 players for the most part at the top of any vertical that you're working on, be it real estate, be it health, in those discrete sections. So we look for that leader. How do we go find the category leader and then invest behind that organization so they actually grow? Because one thing about software is a bit of a platform game, and you'll see that it's hard to buy the 8th player and have them become the number 1 or 2 player. You want to buy kind of the top few businesses. So that's one we look for. Secondly, if we can't find the category creator, then let's go actually build it. Let's go buy 2 or 3 businesses, put those together, and then over the life of our investment, continually add on acquisitions. So then we have a scalable platform today that now is the category dominant leader. We own a company called Granicus in our portfolio. That's the default citizens engagement platform for local and state governments around the U.S. That company was 1 or 2 acquisitions, many years ago. That's now been, much more than that. It's a highly scaled business now. And then the third area I'd say is we look for category disruptors. And these are those businesses that more people think about when they think about software. That's where there's an entrenched competitor, there's legacy solutions, legacy technology, and then we can buy the vendor, the market leader that's now coming up and taking share from that vendor. And so we look for those three types of businesses, and you look at our portfolio, and they really represent, those category of companies.
Got it. And, if you could just describe the current landscape in terms of pricing multiples you're paying, in terms of expectations from sellers and just deal flow in general, maybe even, availability of debt capital given high interest rates, et cetera, high inflation. We've seen a pretty crazy cycle in the last couple of years, but things in enterprise software seems like it's coming back closer to the sort of average line in terms of multiples and whatnot. Could you please share a little bit more on what you're seeing out there?
Sure. We look at the private markets and public markets a little bit separately. They're definitely correlated. So as public markets which get priced every day, then they come up and come down. Private companies don't move quite as fast in valuation because they don't get priced every day the way public markets do. To that end, though, there is definitely, we call it a period of monetary expansion, and that really started kicking in kind of the latter part of 20 through all of 21 and into early part of 22. And that's where, if you look at maybe revenue multiples is a way to think about that. You take a look at SaaS companies growing more than 30%. Their average, those high growth SaaS companies pre-monetary expansion were kind of in the, 10, 12, 13 times kind of revenue multiples. That expanded up to 25 plus 30 times, and then came back down because of interest rates, because of some of the macro uncertainty. You saw that come back now to about 9, 10, 12, about where it was pre-expansion. So one, we've seen that spike, and we've seen things come back down now for the most part. Still a little bit elevated from 2018, 2019, but nowhere near that broad monetary expansion time. So one, that's what we see happening with those valuations. Now, lower growth SaaS businesses didn't peak quite as high, and so they kind of stayed within a little bit of tighter band, those that were not growing as fast. So that's kind of what we saw happen just from a valuation perspective. Obviously, then, if you spend time where I travel, which is really the mid-market, which are well over 95%, 94% still owned by a founder, that founder, if they're looking to do a deal, they're thinking about where their valuation sits. And so, not a lot of deals were happening for the balance of 2022. 2023 was a slower time period. We signed and 2 deals in Q4 of 2023, and we're seeing a very active pipeline now as things begin to start to come to market. But very different level of activity we're seeing today than I'd say we saw in the first quarter, a year ago.
Thank you. Makes sense. Now, maybe great segue to talking about the exits now, because when you invest in companies, you obviously have to think about exits. What are you seeing in the exit environment? And I just want to add a couple of more thoughts before you respond. We've seen more larger incumbent funds just getting bigger and bigger, right? There's this this skewed kind of concentration of larger enterprise software funds like Vista, like Thoma Bravo, like Francisco Partners, et cetera. And also in the last couple of years, you haven't really seen a lot of strategic exits to strategics in private equity in general. Now, perhaps it's a little bit different in enterprise software, but you hear about other private equity funds buying from another private equity fund. But when you get so big, who's going to be the buyer other than strategic? What are you seeing in that regard?
Yeah, so if I think about our flagship strategy, where we're kind of in that mega cap strategy,
Correct.
And kind of what are your exits, obviously, when the IPO markets slow down, which they are right now, then you look for other ways that you exit. We are looking at some strategics. IBM just recently bought one of our companies, Aptio.
Congratulations on that. Yeah.
It was very, very, and Sunny, the CEO there, did a great job with that business under our ownership and partnering with him. That's an example of a strategic saying, hey, here's an asset that we've known for a while that, that we want to acquire and do something with. So you're seeing more of that happening. And I think that's going to loosen up a little bit more as corporate boards begin to get comfortable with, when they use stock as currency to do acquisitions, and or balance sheet capital, whatever the case might be. I think when you come down to the mid-market space, it's actually interesting because now if you take a look at all of our exits over the last 13 years in Foundation Fund, we're almost 50% to what we call sponsors or to other financial buyers, and then 50% to strategics. And so when you're kind of in that space where we sit and we're exiting businesses at scale, we seem to have a broader set of buyers in that universe. But your fact is right, is in terms of, at some point, a super large organization, you've got limited exit opportunities. You're either going to go public, or you're going to have a strategic acquirer, or you might have one, or maybe sometimes multiple private equity firms club together to do a deal.
Got it. Okay. If we could talk about the operations playbook that you came to Vista and pioneered and solidified and scaled, as I understand it. So I would really love to understand that journey that you came and took on, and if you can just share whatever you can. Of course, you're not sharing all the trade secrets, but I'm a private equity professional myself, and I want to learn about operations all the time, and I would like to hear from you what that looked like.
Software companies, and enterprise software specifically, there's a few things about them that make this dynamic work really well. One, they're normally high gross margin businesses, unlike retail, unlike manufacturing, where you're kind of in a single digit, kind of margin perspective. But because of that, you don't quite have that focus on process, that focus on discipline, because you've got gross margin to play with. If you're in a manufacturing setup, or every point really matters. And that's where some of the ISO 9000 and some of the early work that was done, in manufacturing took place to try to drive more efficiency to create more margin. Well, you didn't have the need for that, but guess what? If you did run a software company with a bit more process, if you did run a software company with a bit more focus, you could actually then either free up more EBITDA, or more importantly, free up more dollars to reinvest into your product, into your go-to-market, into market expansion. And so you're right, Robert hired me and said, hey, I got a great idea. We have some nuggets here. How do we then scale it and make this a platform? So job number one for me at the time was to really take what was kind of in everybody's head and codify that, and then also take what I learned at Microsoft and how do we apply some of these broader principles around enterprise software. And we created the first white papers. I wrote the first 13 or 15. I hope they're in a museum or an archive right now. And we're up to about 115 plus of white papers in terms of just how you run certain aspects of a software business. And the applicability to companies that we bought was pretty incredible. And so a lot of opportunity there for applicability of these best practices. The next thing was to say, how do we get that last mile done? And we found there that we probably need subject matter experts that can come in and work with our founders, work with the executive team to kind of complete that last mile as we're trying to do things. As an example, a product roadmap sounds very basic and simple. A lot of companies in the spaces where we play, the product roadmap is driven by the founder. He or she gets on a whiteboard and here's what we need to do. Because if you think about the evolution of a software company in that emerging phase, that's where the founder is really the soul and spirit of the product direction. The growth phase is where now we need to scale this. Is a product market fit? What's your ideal customer profile? We buy businesses in that scaling phase, and then we exit it, at mature businesses, right? But along that whole continuum, there's best practices you need to grow your go-to-market. How do you do an add-on acquisition? How do you integrate it? And so creating then a team of people that could come in as subject matter experts and help our companies go do that became very important to us. And then lastly, it's a dynamic library of white papers and resources, because every time we buy a company, they've done something interesting that we can now extrapolate that and apply it to the portfolio, or we hit a new challenge or something new comes up. Gen AI is a great example. 5 years ago, we weren't talking about this with our portfolio companies. Now we are. So then how do we use Vista and our value creation team to, in a one-to-many fashion, support our 85 portfolio companies as they're thinking about Gen AI and the impact on them?
Very interesting. If we have some time, would you mind sharing an example of an investment where it was one of your favorite case studies of applying that playbook and then exiting successfully?
Yeah, and trying to pick a favorite one is like a favorite child. I've got three, so I don't have a favorite one. But I will tell you, if you have more than two kids, you have one that irritates you
Right.
more than the other three. But in all fairness, in all seriousness, maybe I'll just think of one as a business called Reich. Reich is a company that's in the enterprise collaboration space. Andrew, the founder, was looking actually for growth capital, not a buyout situation. We said, hey, what you want to do, you don't just need money. You actually need our resources. And we found that, partnering with you could actually help you get where you want to go. And a couple of challenges he had. One is he was kind of stuck in the middle where, and I call it that tweener strategy that's uncomfortable, where he wasn't lightweight and small for the smallest opportunities, but he also wasn't large scale and enterprise. He was kind of in the middle. And so we said, hey, let's help you actually move into the enterprise. He had an inbound sales motion. So we said, hey, we helped him actually deliver an outbound sales motion, create an enterprise sales team, create an enterprise support resources. One like a small data point, I want to say 3% of their revenue were contracts that were greater than $250,000 of annual recurring revenue. By the time we exited, 12% was, greater than $250,000 of contract value per deal. So that's just one small example. He was able to scale up his enterprise focus and then become relevant to larger players. And ultimately, Citrix bought that business as it was in line with what they wanted to do on their collaboration platform. And so, founder looking for growth capital realized that partnering with us would actually allow him to get more than just money, which is really what he needed. Building out an enterprise class sales effort. And that one specifically as well, he had a development center in Russia. This was 2018. It was a bit of a risk for us, obviously more of a risk today. We were able to then stand up what we call a center of excellence in Prague, and able to move 200 plus resources and stand that up. That's really hard to do. That's one thing that we do globally is help our companies identify the best places to set up a center of excellence for either development talent, marketing talent, go-to-market resources, whatever they might need, or back office talent. And so that was another good example where there was no way he could have done that without the support of us, having done it hundreds of times across our portfolio.
Amazing. Speaking of different locations, just curious, how did the evolution of Austin, Chicago, and Singapore happen? Like, why those three places, not San Fran or New York or those typical places other funds start?
Yeah, so we actually started in San Francisco, and so that's where we put our first shingle and had our first offices. We then found out that we're not early stage investors, and a lot of the early stage community was in the Valley, but we realized that the companies we're buying, they're not in San Francisco. They're in Alpharetta, Georgia. They're in Dallas, Texas. They're outside of Chicago. They're all over the U.S. And so we figured we'd get to a more central location. And so we opened up a Chicago office and then ultimately an Austin office. So that's how we got started there. We also have a New York presence as well. Singapore was interesting where, a lot of our companies, and again, it goes back to the value creation support that we have. A lot of our companies, when you're a software company and you want to expand internationally, you normally go to London first to try to cover, that market. And if you want to go to Asia, you normally go to Australia or you go to Singapore because they're English speaking countries and you can, get people there. So a lot of our companies had a sales outpost, in Southeast Asia, Singapore specifically, but did not have a lot of support that they got from the US as they tried to go sell to large organizations, around the Southeast Asia and greater Asia regions. So that's why we put some value creation resources in Singapore.
Got it. Makes sense. The next question is a very rare question. I'm sure you don't get asked this question by anybody. Okay?
I love these, Najib. These are the best ones that no one ever asked me.
You ready for this? So Gen AI, what's Martin Taylor thinking when it comes to Gen AI applications in his existing portfolio companies and new opportunities he's looking for?
Yeah, so I'll talk about a couple different angles. So one, we are fully on the camp of Gen AI is a transformative platform and set of technologies that will transform everything that we do going forward. We put it on the same category of the internet, of SaaS and cloud and mobile. Like all the ways that change everything we do, Gen AI will do the same thing, if not even more. So it's not a fad. It's not a, hey, let's think about it. And then 2 years from now, there'll be another topic du jour. That's not the case. Secondly, or another way that we think about is two things. One, baseline for us is internal productivity. How do we use Gen AI at our portfolio companies to further their development efforts, further their marketing efforts, all the things that we can do to increase productivity, increase quality of delivery. Gen AI is an enabler. We had all of our CEOs together a few weeks ago. We had the benefit of having both the CEO from Anthropics, in one session with our CEOs, and then we also had OpenAI CEO in another session with our CEOs to really help understand the importance of what this is across our portfolio. And so the second level then is how do we think about our current product offerings from an offensive perspective, and what else can we build and what else can we deliver to our customers based on Gen AI and our opportunity for large learning models and working with them. And then also defensively, which of our products are at risk because of what's happening in the marketplace, not today, but 2-3 years from now. How do we think differently about that? And so there's a lot of work that's been done there. And then we found that in terms of thinking about new products and how to kind of think about that, we did a couple of hackathons partnering with Microsoft and GCP as well as AWS and their resources. Again, we can provide that access to our companies because of our platform. We had about 250 people across 33 different companies really kind of doing a hackathon and creating pilots and prototypes. You take a bunch of developers, give them a bunch of Diet Cokes and free pizzas from Thursday to Sunday. And man, you get some amazing prototypes that come out of that. So we were able to do that as well, where ultimately we want to deliver new products and new solutions leveraging these platforms. That's the last thing that we've done is created a very simple matrix of a risk rubric that we now use for any deal that we're looking at, and understanding, the Gen AI impact on their product set, on their customers, both today and going forward, based on the insights that we have. And so it factors into every decision we make on every deal that we're looking at.
So overall, would you say Gen AI is good for humanity or is it bigger risk? What's the balance?
I'm not so broad enough to give the humanitarian aspects of technology. I will say that with any technology shift, and I can go back and, again, I was the guy that did internet presentations in 92 and 93. There were concerns there about what's going to happen there and then how the world played out. I think there's always going to be concerns with any new technology that has such a transformative and such a touch on every aspect of society. So there's always going to be concerns there. I personally, because all I've ever done in my life is software, I think that it's a great tailwind to fuel productivity, fuel innovation, and fuel opportunity.
Makes sense. So this part of the interview, I want to talk about you as a person. I'm a values and principles kind of a guy. I ask these questions to my guests. A lot of us know that Robert Smith and David Rubenstein, pioneers in private equity, and they actually interviewed each other.
Yeah.
And talked about philanthropy, right, as one of their biggest focus in life. And I also know that you're involved in philanthropy, and I'd like to ask you, of all the different initiatives that you're involved in, which ones are you most proud of that you want to share that could also inspire others that are one day hopefully could be as successful as you are and have the opportunity to give back. So would you please share?
Yeah, and thank you for the compliment there. It's interesting. I working at Microsoft, Bill was a very principled person in terms of giving back. Obviously the Gates Foundation has done phenomenal things in attacking some of our society's biggest challenges at scale. And spending time, at Microsoft in my early days, and being around Bill, that I had time for the time when I worked for Steve, really, had a wow, we're building and creating opportunities to then help others. And how do we do that? And how do I think about that? Then coming to Vista has given me a different platform to go do that. The thing that I've tried to do, when I talked earlier on in our conversation about my horizon was very limited growing up. We were, fairly poor, for part of my life as a youngster. And so again, my horizon was doctor, teacher, lawyer, minister. That's kind of all I saw. It's all I knew. I luckily bumped into Microsoft by getting that internship, and then that happened. I luckily bumped into Robert by, a mutual friend of ours, and that's why I learned about private equity. So one thing I've tried to do is channel and push a lot of my resources that my family does to providing access and opportunity for people that would not normally have it. So there's a thing I'm involved in called the Human Sweat Center that's here in Austin, Texas, that really helps African-American males, have visibility of, they do a trip to Wall Street, they do a trip to the Valley, they get these kids internships. Some of these kids have never traveled outside of Texas before. They're doing an internship with a manufacturer in China for a summer. And so I thought, what a great platform to take a lot of young men who ordinarily would not have access or exposure to these types of careers and professions and provide that. To just then get that spark, oh, wow, I didn't know I could be that. I didn't know that existed. I didn't know there were jobs like that. And so anything that we can do as through my family office and our platform to provide, and I like to say, access, opportunity, and experiences for people that would not have them is something I really get behind. And I've spent a lot of time in trying to find and identify the areas where we can then fuel that at scale.
That's amazing. You're also involved with the Milmin Institute. Tell us what you're doing for the Milmin Institute.
Yeah, a couple of years ago, and to Mike Milken's credit, he really saw that there's a gap, I'd say, in diversity when you look at asset managers. And at Vista, we're very proud of the fact that we're now 52% women across our firm. But if you think about private equity and enterprise software, two fairly historically non-diverse areas, and we intersect those two. So very proud of where we've gotten as a firm. About 40% people of color, across our firm that we feel very proud about. But Milken and said, hey, how do we then leverage the Milmin Institute to really go attack this problem at scale? And so I'm a participant with quite a few other asset managers, both LPs, GPs, as well as a few other firms, to go try to create some scale and go figure out how do we then go help address this problem of where there's just a lack of diversity. It's gotten a lot better, but a lot of work to do. And so Milken's Council for Diversity and Equity Inclusion within asset managers for the last 2 years has been a great platform to try to go attack that problem.
And finally, I'd like to ask you about your personal life. Anything you want to share with our audience about you that is not readily available out there on the internet to go and search? Who's Martin Taylor that you're proud of that you'd like to share with our audience?
So I would have, had you not said that I'm proud of, I have a long list of things to share with you, but you said something that I'm not proud of. No, I think that, I'm very participatory, and try to be, in terms of helping, again, female, Black and brown entrepreneurs, executives, asset managers. I made a decision about 3 or 4 years ago that all of my personal investing would go to those platforms as much as I said, all 90. I think our
Martin, sorry to interrupt you. I fall in that brown category, just so you know.
You do, Najib, and so you let me know how I can help Tinsley Park. It might be too small for your platform as you're growing and scaling.
Oh yeah, sure,
But I looked around and you just see kind of the lack of availability of capital and access to capital. Back to my whole thought about access and exposure and opportunity. And so my family office and I said, hey, let's just go direct a lot of our resources, 90+%, into these platforms. And so I'm very proud that, over the last 3 or 4 years, all like 3% of every dollar I've invested outside of Vista has gone to either a female VC-run firm, or Black or brown or underserved a member that's running a private equity hedge or venture capital platform, and entrepreneurs. But I found that it's easier for an entrepreneur to put them into one of these platforms because I don't have the time that they might need to help their business, but I can then work with those platforms to help them. But that's where, I'm very proud of the fact that we've gotten that remit and commit on my side to go do that. And we've been pretty successful over the last few years.
That's amazing. So with all these accomplishments, Martin, what keeps you inspired?
I like learning. I was just talking to a CEO. We were having a tea yesterday, and he asked me, "Hey, why do you still do this? You've obviously been very successful." And I said, "Well, for me, one, I really like every time we buy a company, I just love learning what they do. I love learning how much productivity that they provide to their customers. Things that I think could be a spreadsheet or a $300 million software company because it's more complicated than I think. And so one, I love learning every time we buy a company. I get very connected to the management teams and to the founders of these businesses. I love spending time with them, getting to know them as people, helping them grow in their career. Being at the age I am and the executive maturity that I have. It's a nice way to say I'm old. I find that some of the CEOs and founders, we partner very well because I can share with them experiences having been on 50 boards over the last 17 years and my time at Microsoft. And so I love sharing with founders and executives as we partner together. And then thirdly, I just have a high appetite, for staying involved and staying busy. My kids joke that when I die, they got to put a phone in my casket so I don't miss a call. I just, I really enjoy doing what I do, to be honest. I don't know what else I would do.
Well, Mr. Taylor, this has been an absolute pleasure. Ladies and gentlemen, Martin Taylor.
Thank you, Najib, for the time. Thank you for your platform. Congrats to you as you've evolved, your career and got it on your own there. And you've got my email. Send me your PPM and we'll have a chat.
Will do. Thank you. And if I come down to Austin, which is not far from here, I'll contact you. Hopefully one day we'll be able to meet.
I would love to grab a meal, grab a coffee with you for sure.
Thank you again.
Okay. Take care. And thanks again for the opportunity to speak with you today.
Thank you as well.